right, welcome back to another live stream of the person that does not post on YouTube anymore. Welcome back to the channel. We got Bacon with us today. We're gonna have some fun. We're gonna hang out. Yeah, not really any time limit, so this might turn into a long live stream. We'll see what happens. Depends on the I don't know, content that we get, the people that we get participating, and we'll see what happens. But shoot, what was I gonna start this out with? I don't even know. So
meta portfolio question mark or no?
Yeah.
Or
so yeah, we'll talk about. Well, I mean, we got meta up here just for kicks and giggles. It's been strong, really strong lately. Obviously, that's kind of just insane how this has gone from I think it got to a low of $88.
Yeah.
I think I actually have like a very small portion of shares at like 88.90 or something like that. It's up over 400% now from that point. $527, just absolutely insane. But hey, you know what? The market is always perfectly efficient, right? So what are we doing? What are we doing here? But yeah, so I think we're going to start off with portfolio update. I'm going to go over my portfolio, at least individual stock wise more. And I'll also show a breakdown of like index versus individual, kind of what I've been buying lately. I don't think I've been selling too much lately, but what I've been kind of stocking for potential accumulation points, accumulation opportunities. And then we might go into a little bit of a somewhat degen Crocs trade that I did.
Oh no. Opportunity.
But I feel like I have to explain it, right? If it makes it into the portfolio, it kind of makes it. So we're gonna go through that, and I guess you know what, let's just get going. So obviously Meta is still my largest position because I haven't sold any since the last portfolio update. It's up 422% for my cost basis, and it makes up about 22.09% of the total individual stock portfolio. When I talk about individual stock portfolio versus like total portfolio, I'm a heavy indexer, and I've got about 65%. Well, now it's 65% in VTI and SPY, and then we have and those are mostly like 401ks, tax sheltered accounts, things like that. And then we have individual stocks, and it has grown into a larger portion of my portfolio just because of the winners that I have had in there. Yeah. Yes, the dogs are going to bark soon. But
you showed me your neighbor or something? I don't know.
Oh, that she might have she's made an appearance by throwing things on this channel every once in a while.
Oh, okay.
If you know, you know.
Okay. I don't know, but
you don't know.
I think I'm piecing the connecting the dots.
Oh, thanks, honey.
Okay, alrighty, not neighbor.
Amazon is coming, delivering a package, and saying that the dogs are gonna go crazy soon. So give me a second. I'm gonna shut the door.
All right.
Thank you for the heads up.
Tommy,
you want to come? Want to come downstairs and hang out? Come on.
Live chat type wall, spam wall in the live comments.
Yeah. Wall. Thank you for the heads up, babe. Appreciate it. So
okay. Dots are very connected.
So we got obviously individual stocks have grown into a pretty large portion of the portfolio just from the gains and Andrew Wallstream, yes. And yeah, so Meta's been a pretty massive winner. I mean, looking back, why did I ever sell like half the position? I don't know. That would if I wouldn't have, that would have been like 50% of the portfolio right now.
You did it better than I did. I was going to do that, and yeah, I screwed that all up. Whole story.
you know,
Anyways, what's that?
wall.
The
Okay.
wall?
So, but going to Meta, I mean, it's kind of
Yeah.
hard to, you know, I've been trying to accumulate solid companies that I think are, fairly valued or discounted, right?
Hmm.
My asset allocation is going to be on the accumulation stage is really going to depend on my conviction in the company and how fairly valued or discounted I believe it is, how much of a disconnect there is in the market there, right? So,
Yeah.
um, Meta being like a prime example of a massive disconnect of
Mhm.
my conviction, where I believe fair value was and where value got to.
Yeah.
Yeah, I mean, that was the perfect example. And then one of the things I've been really trying to focus more on is focusing more on the accumulation aspect and less of the distribution aspect. Like
Hmm.
buy high quality companies that you think are going to have, years and years of tailwinds, and then just hold them because um I mean what you'll see in a lot of like portfolio studies is that typically a very small number of positions make up for the majority of the portfolio gains. And that's true with like indexes. It's true with
Yeah.
a lot of portfolio managers. And sometimes, if you try to be cute like I was and take off like half your position between like 250 and like 320, you miss out on a you
An
know
additional run.
another 100% gain right there, right? So, but it could have been worse. I could have sold it all. I only sold about like 60% or so.
Rubbing it in. Rubbing it in.
Yeah. Sorry.
No. It's
I
all good.
basically
It's all good.
I basically took my cost basis off plus maybe a little bit. So
Yeah.
like the
Yeah.
remaining shares are basically,
That was
you know,
that was my original plan too.
house money, right? I hate that term, but house money. Um so but even right now we've seen that Meta has gone, from highly discounted to now to like the 5-year average of value, historical value, to now having a slight premium.
Hmm.
Like we can see that the LTM net income yield is now at 2.82 compared to 4.5. EBIT yield is at 3.4 compared to 5.52. Free cash flow yield is 3.16 compared to 4.3, and operating cash flow yield is still above 5, so 5.13 compared to 8.14. And if we look at this kind of plotted out, right, we can see the like multiple deterioration or multiple contraction, and this was basically the bottom. And at one point I think the EBIT yield got above 10% and the operating cash flow yield was like 15 or 16%. So a lot of these gains have just come from multiple expansion back up. Once the market realized that this was just kind of a short-term cyclical pullback, and then Meta got their spending under control and bottom line started to increase a bit. It started going back down to historical like mean value or mean valuation marks. So I really think that Meta could be like fairly valued is probably between this 2.5 to 5% yield mark on the bottom line yields. So we're not even like crazy overvalued right now either,
No.
right? And that's something where a mental exercise in my mind, I'm like, okay, well, at what price would I be like, okay, maybe I consider taking this off, right? Um, and this I did this in like 5 minutes, so it's not anything super crazy, but I just kind of put fair value yields of 2.7 to 5.1 and looked at basically historical normal growth rates of like 10% to 18% on the bottom line. And like 5-year target values, well, like current fair value would probably have it between, I don't know, 330 to 520 or 600. If we keep up this type of growth rate, which I think Meta can keep up, a low double digit or mid double digit growth rate, like 10 to 15%. Our 5-year targets are still in that like 775 to 1200 mark, right? So it's not like it's ridiculously overvalued. Now, if Meta went on a crazy run and in the next like 4 months got up over $1,000 or something like that, like yeah, maybe like there's so much built in at that valuation, so much future potential baked into that valuation, that at that point maybe it's like, okay, yeah, let's revisit, assuming that there's something else in the portfolio where I'm like, I really have a lot more conviction in this one, especially at the current valuation. So Meta, I'm still just kind of chilling. Amazon has taken off nicely, 94% gain on 11.11% position. KRC, I'm rooting for you, buddy. 8.34% position, 5% gain, not including dividends. So if you include dividends, that's probably closer to like a 10% gain, or actually no, probably more than that now, 12 to 15%. I think I've had that over a year and a half or two. Arista Networks. Arista Networks is one that I've started averaging up into more aggressively. So it's at about 8.3% still. I could potentially build this one out a little bit larger. If it got into that $200 range, I think that's really, really attractive. But for now, given where it's at, which I think is around, it's around 300, like 290 or so. ANET.
Yield max.
ANET.
There we go.
Yeah. So right around 297. And I'm still kicking myself. When I first started accumulating with this position, it was like right, where was the flush down? Right here, 134. That was when I actually took a buy at like 100 or something like that. And then as I was researching, I took another buy at like 134. And then I should have staggered into this one quicker. And the reason that I kind of accelerated my deployment of capital into this to build it up more was just something that I recognized about a business segment that I didn't think was going to be. I wasn't baking that into my valuation. And this business segment, which is ROCE, which is RDMA over converged Ethernet, is highly impacted by AI compute spend. And it's basically a replacement for InfiniBand networks. So the research that I've done, and you can go on Meta, Meta, I should just invest everything that is like correlated around Meta. Because I would have literally been buying in 2022 when Meta was bottoming, I would have been buying Meta, ANET, NVIDIA.
How far do we want to extend this? Like, I'm just wondering because like we would include what, like maybe combination of double verify and IAS. I want to say.
Oh, that's true. So this was just from the research I was doing with Meta with their open engineering articles, looking at their network infrastructure builds and their AI compute builds.
Yeah.
And the winners, like the ones that they brought to the forefront, were their massive NVIDIA GPU clusters and their open development with Arista Networks. So like those two were pretty like obvious of like, hey, if NVIDIA keeps this up and Arista keeps this up, they could have some pretty good long-term tailwinds. And man, that would have been insane. But hey, still pretty good. So, but there had been some new ANET articles coming out, or Meta engineering articles coming out about ROCE, which is RDMA over converged Ethernet, and comparing our ROCE with InfiniBand. And the narrative overall was that Meta engineering is very bullish on ROCE, and I think ROCE is going to take a decent amount of business away from InfiniBand over time. And to give you guys a just numbers wise, I think NVIDIA was projecting a yearly run rate of InfiniBand and their network segment of like 10 to 12 billion in top line. So it's not a small chunk by any stretch, right? Like that chunk alone is, I think, 3x ANET's revenue. And what ANET would probably do is they'd probably come in at a lower price point. So maybe that 10 to 12 billion would really be in like 5 to 6 billion in realizable TAM, or it wouldn't be TAM, it would be something more direct, right? Realistic revenue expansion. So after that kind of came out and I digested that and researched that, I just wanted to get more exposure a little bit quicker to ANET. So I built it out a decent amount more in like that 250 to 270 area. So Google,
What are your thoughts?
Man, I should have probably added when it was in one at like 135 or whatever, and I sold like some.
How has it been doing? It's been a while since
it was such a bad decision on my part. Like
Google, it's
Google,
jumped back.
yeah. I mean, they announced the deal with Apple, or no, it wasn't an announcement. I think it was rumors. I'm not sure if it was an official announcement yet, but like Google is just one of those where their business economics are so good on so many of their product lines, and their management isn't that great, but the company's ability to just print cash like no other is just like, oh my god, like I'm betting more on that than management. Right? I'm betting on their ability to really monetize. Like search is going to be a drag. I think search growth is going to lessen, but being able to monetize their platforms like YouTube, yeah, I don't know. I think they could. I think it could turn out to be pretty good long term. With what I think they're going to be able to do with YouTube and Google Cloud, with the development that they've been doing with their TPU AI clusters versus GPU AI clusters, which is something that I think more people need to look into, is that Google has their own self-developed TPUs for some of their AI clusters, whereas a lot of other players are just going the NVIDIA GPU route. Google is taking a dual approach, and their TPU performance is really, really, really good. So it could turn into them having a little bit of an edge with their compute hardware environment going forward. I don't know. I'm just torn on it. What do you think about Google?
I am thinking that I missed out on some big news. And by big news, I mean they're offering to acquire HubSpot just 2 days ago. Because, yeah, like the reason why I don't like keep incredible close eyes on the big tech names is I'm majority indexed, so like for me, whatever big news headlines around them, it comes and goes. Like maybe I'll see it, maybe I won't right away. But yeah. It was announced Thursday that they would at least attempt the acquisition for HubSpot.
Huh? I didn't even see that.
I want to say it's, from what I can see, it's a shared deal. Like the HubSpot shareholders would get some sort of Alphabet shares. And yes, HubSpot, you expect HubSpot to jump. And yes, you expect Alphabet to dip some. But the day after the announcement, Google actually, had quite the bounce. So
interesting.
Yeah, like if price is not noise, if price is a signal, then maybe this means something. I don't know. I don't know enough about HubSpot, and I don't know enough how this would get integrated into Google, assuming it goes through. I just don't know. But
yeah, I don't know about that either. That's actually the first time I'd seen it. I was more interested in the rumors of Apple, basically trying to negotiate a deal with Google to have Gemini integrated into the iPhone, which would be huge.
Yeah,
Right.
that would be pretty big.
If that actually went through, like it would be huge. And then I think that if that goes through, I think it changes their narrative that Apple would just develop their own search engine and replace Google as the search engine on their iPhones, because it changes the posturing of them going away from a Google partnership to like more entrenching themselves into a Google partnership.
I just wonder
So
what the
I
deal would
would.
be, like how it would be structured.
What was that?
I just wonder how the deal would be, like how it would be structured.
Yeah, I don't know. I mean, it's hard to say.
Uh,
I think currently with like their search deal, I think Apple gets it's either a flat rate or a flat rate plus a percentage of
yeah.
ad revenue generated from Apple devices. I'm not totally sure, but I think just from the narrative of Apple potentially pulling their search deal and going to a different search provider or developing their own search engine, I think that narrative would probably change drastically, because they're basically entrenching themselves more into the Google ecosystem at that point. So, and I think that's why, I mean, that was why we got a really good reaction here. I think that happened. I think it was up like 7% on the day or something like that on that announcement. So, and I sold like right here or so. So I trimmed like
Yeah. No, but
maybe
because this is
10%
a
of the
portfolio
position.
update, yeah, like you still
Yeah.
have.
Yeah.
Yeah.
So that was I mean, I don't know. I was even talking about like 120 is like a really, really juicy area. I was just having some issues with what I was seeing with management, but at the same time, like that also could lead to an opportunity. But you're just not going to play them all right. Kind of like Cigna. Oh my god, I'm so bitter about that.
These things
Dude,
happen.
Cigna. Have you seen where Cigna's at lately?
It had that violent downswing, and I don't know where it is nowadays. It's a space where I'm also not good with.
Look at that.
Oh yeah, yeah. Okay, so yeah, there's that violent downswing that we mentioned.
So downswing, I think I
Yep,
sold it about 260 for a little bit of a gain.
yep.
Um,
And then
or at break even, because I was like, I don't want to get messed around with a merger acquisition, right?
yep, yep.
And then they canceled the merger acquisition, and then it was just like freaking off to the races, all time highs. Like, really? Come on. Oh man, what a bummer. Oh man. But
These things happen.
anyways, so Paycom is actually one that I've been adding into
Mhm.
more, and I might do the same thing with Paylocity, because I feel like the HCM space is starting to find its kind of like bottom. It feels like a lot of the negativity and a lot of the downturn has been digested. And they're at least when I was purchasing them, they're at decent evaluation still. If we look at like Paycom,
Mhm.
I think my average was like, I mean, I'm up 7% ish on it on a 4.7% position. I think my average is right around like 180 or 170, something like that. We'll see what happens. I mean, if it got back down to like the 150 area, that was really attractive. At least on a historical basis, a historical valuation basis, it was getting really cheap at that point.
Mhm.
And we can kind of see that if we look at what operating cash flow template, I want to say. Yeah, I mean
Yep.
the sell off. It was over like a 5 or 6% operating cash flow yield, and EBIT yield when it initially took that sell off. So, um, I think Paycom, uh, well, let's say Paycom has better upside potential as far as breaking into the larger enterprise business space. When you look at like what Paycom references larger customers and what Paylocity references larger customers, it's vastly different. Paycom's reference to like larger customers that they're like that's driving their growth is, I think, like businesses above like 3,000 to 5,000 employees. Paylocity is like, oh, business is above like 500, right? so so it's like apples and oranges when they reference like going upstream to larger businesses. And I think recently with a lot of the scrutiny around like SaaS spend, I think there's been a lot of auditing, a lot of reduction in like licenses across a lot of SaaS service providers, which has been a bit of a headwind. Um, you have interest rates that have now remained flat. Interest rates dropping could actually be bad for Paylocity and Paycom in a
Yeah.
sense, because it'll be a headwind. It's kind of like a two-edged sword. It'll be a headwind to their revenue because they'll be getting less interest income, but it should be a tailwind to their multiple, right?
Mm.
Because relative multiple, if interest rates start to decline, should be a tailwind for them in general as far as their relative multiple on valuation. But I think what we're going to see, I think there was a larger push to go away, not away from quality, but go towards cheaper space. And Paycom is not cheap, right? So over the last like year and a half, I think a lot of businesses were cutting back, auditing their SaaS licensing, cutting back those licenses to make sure they weren't spending as much as, or weren't overspending in it compared to what they're actually using. And then I think we saw a bigger push away from what I would say higher priced, higher quality players into lower priced, lower quality players just for cost savings. And I think if we see this market turn around as far as like the quote unquote real economy, the SMB space and the SME space, I think that will be an additional tailwind for the higher quality players like Paycom and Paylocity. I think they'll see a lot of revigorated like growth coming back to them. And if Paycom is able to keep up their growth in those larger enterprise players, I think that will help them just be another tailwind for them. So I'm pretty happy with what I built it out to. Like I could potentially, I don't know, could potentially build it out more, but I'm not really dying to at the same time. I think I got it to about 5%, and I was like, all right, I'm pretty happy with that.
Yeah.
Cash position has been dwindling 4.47%. Oh boy.
Wait, is that a 0% on cash? How can you get 0% on cash?
Hey, this is all relative
But
non-dividend gains, right?
oh, okay, all right,
So
So
no,
yeah,
I don't calculate any of dividends or anything like that into
okay,
this chart,
uh,
right? It's
yeah.
just cost basis, current value.
Mhm.
So that might be how I structure things. Hey Dex, how's it going? How I structure things usually is that I am aggressive in like 401ks and IRAs at the beginning of the year, and I try to front load a lot of my like retirement investments.
Mhm.
So the beginning of the year can sometimes be a little strapped for cash flow. Uh, so hopefully come May, June, I should see that cash flow change in a pretty positive way as far as what I'm actually taking home and not tax deferring. And then I'll be able to build out that cash portion a little bit more. So,
Mhm.
and it also just depends on if you're single income, dual income,
Yeah.
how much you can how much you actually spend versus actually make, how much you can cash flow for just random emergencies, right? If you have a savings rate of like 50%, it's a lot easier to cash flow for those one-time random expenses than if you're spending all of your paycheck. So cash position, hopefully that gets built out. Now this is one that I'm
The pals of
Palo
Altos.
Alto
Yeah.
Networks. Yeah, so this is one that's been a recent build out, and I've been building out more and more. I'm pretty happy with the allocation where it is right now. I would definitely consider bringing it up at certain levels. I think in the 260s, it's looking pretty dang good. I think it's in the 260s right now. Yeah, 269. 250s is looking, better. With the allocation that I have right now, I think I might nibble a little bit more in the 250s, and then probably save a larger chunk that, if we can get another flush down into that low 200s mark, like 220-ish. Oh, that's where I think I would try to plan out making this a pretty substantial position. I would not mind. I don't know, under the right circumstances, the right valuation, as far as as long as the thesis hasn't changed, I wouldn't mind building this out to like a 10%er. I really wouldn't. So, and I'm kind of hoping because these two are kind of in the same well, they are in the same industry, Fortinet and Palo Alto, right? So
the middle one doesn't count.
yeah, no, Crocs is actually a cybersecurity company, guys.
Oh, no.
So we got Palo Alto and Fortinet, and Fortinet has turned out great for me so far. They're going to have more exposure to the EU, lower quality player than Palo Alto from the tech perspective, in my opinion. But I've established a decent position at about $51 right here, which just happened to be amazing timing. So something that I am considering too is that, if I see Fortinet, if I see EU tailwinds and Fortinet going on a run, and Palo Alto does get down to like 220, 200 mark, it might be something where if Fortinet's at 80 and Palo Alto's at 200, relative valuation wise, like Palo Alto is probably just as cheap as Fortinet at that point, or they're probably equal valuation. But Palo Alto has, I would say, is the higher quality player, has better long-term potential. There's a possibility I liquidate that at some time, roll into Palo Alto.
No.
But I don't know. I'll have to look at the tax consequences of that as well, and see kind of where I have it structured in various accounts. But Fortnite's been good so far. I don't know. Might have got a little bit lucky with the timing. But Fortinet was also one that, if it got into the 40s, I wanted to build that out larger as well. So it's just all about kind of like staggering your buys and managing your allocation at various levels, as long as the thesis hasn't changed. So are you in Palo Alto or Fortinet or any cybersecurity?
No.
Other than Crocs?
Just no, I'm just indexed when it comes to that. Like, yeah, I don't know enough. I know enough to know that I don't know enough, if that makes sense.
Mm-hmm.
Yeah, because I've never worked in the space, never really dealt with the space. Like, in a professional environment, I've always been the end employee that got cybersecurity lectured to or at, as far as like, annual or quarterly training, what have you.
Yeah, everybody gets that.
Yeah, but that's about as far as it goes.
It's like identify the phishing email.
Yeah. Yep.
But I mean, that brings us to Crocs.
Yay.
Crocs, baby.
Yes.
Bacon, take it away.
Uh,
How are you feeling about Crocs, man?
You're gassing me up and you're gaslighting the audience. Crocs wasn't my idea. Like, I think you held a position in Crocs before me. I want to say, yeah, Dan, based off his price, his average price, he was in before me. Hayden, if anything, like, I used him as a crutch. So if
We
anything,
all
like,
use Hayden as a crutch, right?
yeah.
Like,
So like, yeah. So I mean, yeah. Like, it was at the time and where it was priced, like, around roughly that $100 ish or below a share. It was very attractive.
yeah.
Where it is
Yeah.
right now, I mean, granted, like, as of this week, it has forfeited some progress, but like, I don't care. Like, I expected this to be a shaky and bumpy ride, and yeah. Like, I just, like, gun to my head right now, like, hey, throw money at Crocs. I'd be like, maybe, but it's not as compelling as it once was, if that makes sense.
Yeah. So the first time that I had a, thing with Crocs from an investment standpoint was kind of right in here.
Yep.
Probably going from that $80 level down to about 50 is
Hmm.
where I was accumulating it the first time. I ended up selling in the 120-ish area. I think I might have sold a little bit on this run too, but pretty much exited the position into here. And then,
Dropped
you know,
again, and
it dropped.
yeah,
I
that was like the
started
last
buying it a little
gasp
bit.
of
Yeah. So, I mean, it's I made some money on it the first time. I'm up on it the second time. Uh, about 33% at 4% position. Um, and yeah, I think it's like from a valuation standpoint, I think this is pretty solid. I think a lot of the Hey Dude acquisition that was being digested through this time has
hmm
kind of been digested. If Hey Dude turns out to see some type of tailwinds, that could be fun. Um,
yeah.
if the
Oh
market
yeah.
changes their perception on that, they've paid off a decent amount of debt. Let me
Yeah.
move this thing. So
Yeah. Like it
balance
was.
sheet, they've paid off a decent amount of debt since that acquisition, right? We had about 3 billion in debt after the acquisition, and they're down to about 1.6. So they've almost cut that in half, right?
Yeah.
And that was really like for me, Crocs was like, okay, get them into a better leverage ratio where they can start buying back shares and put more buying pressure behind the stock. Especially at decent valuations. They're trading at like a 11% operating cash flow, 9% net income, 10% EBIT. Like it's still
I
cheap, right?
I
It's
want to.
still like a buyback story essentially.
Yeah, like because I want to say that it was like last quarter. Yes, the heavy lifting was paying down debt, which we've seen, but they initiated like a modest buyback or like restarted it. And granted, yes, it
Yep.
was modest, but that was a lot more quick than I thought. Horrible English on my end, but
Yeah.
that was that was like restarted a lot sooner than I originally anticipated. No matter how modest it may be, it was still a buyback along with paying down debt. So it's
Yeah.
yeah. Out of all the problems and wackiness in this world, like I expect Crocs to have that wild wackiness, but I don't care. Like fundamentally,
Yeah.
business should be fine.
Well, and the narrative has started to change too, right?
Yeah,
The
yeah.
narrative around Crocs and like the quality of the business is starting to change. So I think there's a good chance that, we do see some multiple expansion from them,
Mhm.
from the valuation side. I think the market could start paying up more for them. I mean, all this is all wrong, guys. Don't pay attention to any of this. Don't do it. Um, that might be a little bit right, but not really. If I was going to do a valuation on Crocs right now, I mean, you could make an argument for
Yeah.
maybe like I would point that up a little bit higher, maybe a little bit higher, 20. Yeah, you can make an argument for that. I think that's probably around what I would, and then maybe a little bit more in the buyback section. Three. 2. Yeah, I think you can make an argument for an evaluation somewhere in this range right now. As they pay off more debt and they deleverage, this should help their obviously enterprise value. A lot of that should transition into like more traditional market cap based metrics. So it's still not like crazy expensive. It really depends on how you factor out their growth. If they're going to be able to grow at a 10% rate, that's going to be really, really good. I don't know if I'd give them a 10% rate of growth. Maybe a little bit less, midpoint, but so they're not expensive by any means. And they should have more firepower as they get their leverage ratios better, get that debt pay down, and increase their buyback amounts. But so it kind of takes me into another point. I have a little section here that's called options now, and it's a very small portion of my portfolio, and this is updated now. But I did have some fun with some Crocs options, and I ended up buying $150 call for January 2025, like 2 months ago, or not even that. I can't even remember when it was. Well, about 2 months ago, in January or so. And so just for example purposes only, I think I at the time, it was right around $100 or so, 100 to 98. I wanted more upside exposure with little capital.
Mhm.
So I went ahead and did a $150 call at a January 25 expiry. And it was about 480 a contract, I think is what I got them for. And then it went on this crazy run. So I wasn't planning on, like, I was planning on just holding these, but it went on such a crazy run, and the premium or the extrinsic value that was getting assigned to those contracts were so high that I just didn't feel comfortable holding it anymore.
Yeah.
So I think it ended up being like a 350% gain, but
Casual.
because so it got up to like $140, right? Or
Yeah.
146 or something like that. And at a point, it was like, there's almost $20 of extrinsic value built into that contract. And I was like, okay, well, now it's like a $170, $180 break even. And Crocs has this tendency to go on these runs and
Yep.
then just right. And I was like, okay, I'm just gonna take that off of the off of the table. Take it off the table. And yeah.
Yeah. Yeah, I
Well,
agree.
we'll
If
see.
someone wanted to long term this company, either you got to get your timing right with options plays like this, or
Yeah.
just go shares, and that's what I did. I was like,
Well, and you really, with options, you really need to just what I focus on a lot is like what type of extrinsic value decay situation am I in right now,
mhm,
right? And how is that uh that time decay and that volatility decay, how am I positioned for it? Um Typically, like, if I'm getting into an options, I want to have it be a time of like low extrinsic value, low volatility. So if volatility goes up, right,
yeah, then it helps you
in
out.
my favor, then it helps me on the contract basis. And so, but usually I'm not doing like super far out of the money calls. This was just one where I was like, hey, you know what? I could see this thing going to 200. If it does happen to go to 200, I want to have exposure to that. But at the same time, I think after a run of uh, such a crazy amount, uh, I
If
just
it's yeah,
didn't
if it's
feel
good enough,
comfortable with it.
if it's good enough to screenshot, it's good enough to sell. When
Right?
it comes to
And
options,
I
especially.
screenshot this
Yeah,
contract like 5 times already, and I was like, "All right,
yeah,
it's
yeah.
it's time to
It's like,
go." I think at one point I was up like 400%, 406% or something like that, and I was
very
like, "Oh
nice.
my god, this is stupid." Um, but when it comes to options, typically what I'm looking for is there a company that I'm willing to buy anyway that fits
Mhm,
into any of the option strategies that I would actually consider? And
yeah.
then if that does, I'm keeping a very, very, very low allocation, right? So the other options that I have that I bought recently um, was, let's see. Okay.
Oh, oh, you want this one?
Dude, I was like the OG of this one, I think.
You want this one? Holy hell!
Wait, what was that? You froze on
Or
me.
oh, I said you want this one? Holy hell!
Yeah, so yeah, I kind of wanted exposure to Warner Brothers Discovery. I know it's gonna like it's a massive turnaround. Um, I didn't want to allocate too much capital to it.
Mhm,
Um, and I saw the opportunity for potentially doing a deeper in the money leap for a January 26 expiry. And at the time when I was buying the contracts, let's see if we can see this. I was buying the contracts at about 450 or so, maybe 460, maybe.
mhm,
I can't totally remember, but like my break even essentially on a price chart, um, my break even was going to be like $9.50 or so um, for January 26 expiry. So it was one of those where I uh, I wanted to get exposure. I didn't want to risk too much capital, and I wanted to try a strategy where I was buying something that was deep in the money. Um, Specifically, I wanted to try buying something deep in the money because I wanted to see potentially how extrinsic value would increase if the option went closer to at the money status, right? So, and does that make any sense to you?
It does for me, but
Okay. Okay.
hopefully the audience is able to keep along.
So, I don't know. We'll see. We'll see how it plays out. It would be one of those where if it dropped to like let's say $6 or something like that,
Hmm.
um, and I thought the company was doing well, or I was happy with how they were progressing, maybe I take that and I roll it deeper in the money and add a little bit more with a small amount of capital, and then just go from there. But this is one that I don't know. I'm just kind of I'm testing the waters with this type of a strategy. I see value in it in certain situations for certain securities, assuming the options pricing is reasonable. Um, I don't want to get in a situation where I am really subjected to a lot of like volatility and time decay. So,
Yeah,
um,
and we're talking about what, like, low single digit percentage of port
yeah,
options. Yeah,
1.28.
yeah. So
What 1.28 of my individual, so like
let's
0.05
let's
of
zero in on that. Let's spend all
0.05% of my total, right?
yeah,
Like
let's spend
super
all the
super low.
intention and focus on that, and only that.
Minuscule, super small. But yeah, man, VRT DC play.
Yep.
I like VRT.
Hmm.
Out of the ones that I looked at, I liked VRT the most because I thought they had really, really good exposure to liquid cooling. And I'm a big proponent of when you look at like DC power plays, like I'm a big proponent of not only like power generation, but like power efficiency. So things that are going to bring more efficiency into a DC from power consumption.
Hmm.
That's I don't know. That's just as big of a deal to me. So liquid cooling, they were one of the players that had, I thought, the best potential for liquid cooling applications, and they've been. I mean, this definitely was not a trash panda one, right? Um, VRT has been on an absolute run for a long time now. But even given the current run, the valuation isn't too. The valuation is a little insane, but it wasn't too insane given the potential tailwinds that we're seeing from DC spend. Um, but this could be one that I am quick to cut potentially if I feel like we might be entering into cyclical pullback because that could be very, very dangerous.
Yeah.
Um, and I think my cost base is like $73 or something like that right now.
Yeah.
And it just, jeez, I don't, that's insane. 12 to 85. Wild. Um, Disney, good old Disney, has actually
Yep.
been doing decent.
Uh, any thoughts and opinions on oh shoot, I'm drawing a blank. Oh, Peltz, Nelson Peltz not getting the board seat.
Nope. What are
Cool.
your thoughts and opinions?
It was funny because, like, at first, originally, when Disney was like interesting to me, I was like, yeah, Nelson Peltz, he's got a good shot. I like his odds. And then the stock price recovered, like performance was getting better. I'm like, yeah, I don't think that's gonna happen. Like, yeah,
Yeah.
yeah. So like, to me, I viewed it like as time went by. I'm like, yeah, sorry, Nelson, you're not, Mr. Peltz, you're not getting your board seat. I, yeah,
Yeah.
yep.
Yeah, Andrew, I don't think valuation on VRT is insane either on a forward-looking basis, right? Optically, it might look insane from an LTM basis, but yeah, I don't. Yeah, we'll see what happens, but
Yeah.
we'll see. We'll see what happens. I think the biggest thing that could hurt, well, the biggest thing that could hurt price action is if they, I don't know, if they have a couple good quarters, but then they start guiding bad.
Oh yeah, yeah.
That's like a dead giveaway of a potential cycle starting, assuming their guides are accurate. So, and yeah, I am in the IT space, so that is what I do.
Yep.
Hey, investing cool. How's it going, man? So we got IWGFF. I just,
Andrew,
I just
proud.
free thought into that with Andrew. I wanted to support him as a friend. I was like, you know what, Andrew? Yes, I will support you as a friend. Kidding. No, I mean that one has some very, that one's interesting. Yeah, go listen to Andrew's talks on that one. It's interesting. So IAS was huge reaction down, and I think it was potentially an overreaction. So it was one of those that I wanted to get some exposure to. I think they could have some really good tailwinds from short form content from like Facebook and stuff, and I just thought the valuation was pretty good at this point. So I think I'm up. I think my cost basis is just under $10. Just under $10. So yeah, and I'm at 2% gain, whatever.
Do you like IAS more than Double Verify? Question mark.
I would have to refresh my memory, but like last time I looked at them, like yes, I did. I like the IAS setup better.
Oh, okay, better setup then. All right.
Yeah. So like, because it's all relative, right? Like,
yeah.
I like Palo Alto better from a quality standpoint, a long-term standpoint. I like Palo Alto better, but I was buying Fortinet and I wasn't buying Palo Alto because I thought relative valuation wise, Fortinet was a better deal at the time. And then I accumulated that, and then Palo Alto fell off a cliff, and the narrative changed on that. And I was like, okay, well now relative valuation on a long-term basis, Palo Alto is starting to get really interesting. Start building that one out. So I don't like to be like, oh, this company is better than this company and like whatever. Like it's all relative to me. And I think it's aligning the quality of the company, how the market values the company, and the I don't know, the discounts applied. Like if there's any type of, I don't know, short-term fear that is potentially giving you a good opportunity. It's just different. So
winners keep on winning, Jesse.
That's true. Winners keep on winning. Don't listen to me.
I'm joking. I'm joking around. Yeah.
But yeah, Paylocity, we kind of already talked about Paylocity.
Yep.
Allison was a pretty quick buy.
Oh man,
for me.
yeah, that was. I am jealous of Hayden's cost basis on that. I forgot what it was, but like based off rough time frame, yeah, like it's
like $40 or something like that.
Stupid great. That man made out like a bandit on this one.
He did great. And I want to say I bought them right before earnings.
Yeah.
Right about here. Let me go check actually. And then I bought some. I averaged up after earnings too.
I was too little too slow with Allison, sadly. But it's a winner. It's a winner.
My first buy was high 50s, low 60s, and I averaged up after earnings. So I think my cost base is about 63.50 right now. So yeah, we'll see. I think Allison could be positioned for some nice tailwinds over the next year or two. And it's relatively cheap, solidly ran company. So it's one of those things where I was like, I want exposure. And then sometimes what I'm trying to do now is that if I'm trying to get exposure and then I'm right and we see a positive move out of it, I'm trying to like reward that position essentially instead of like I don't know, punishing it by not allocating new capital there or removing capital from it. I'm trying to reward it, right? So so that's what I did with Allison, and honestly I could have probably done a little bit more. I think I doubled it up and then haven't really touched it, and I'll probably just see what happens. If it gives me another opportunity to buy in more, I might do that. We'll just see. But right now I'm pretty happy with it.
Yep.
Alexandria,
Yep.
HIW. Yeah, just replace.
Agree. You agree with agree.
Wait, no, it's not agree.
No. Oh no, it's not. It's
ARE.
yeah.
No, agree is ADC, isn't it?
Yeah, that's right.
Yeah. So
False start.
ARE is Alexandria, and then
Yeah.
HIW is what? Highwood.
Yeah, I think
Highwood,
so.
which I thought was just a little bit less of a degen play than BDN. So I took my BDN capital and moved over to Highwood.
Oh, okay. So you were in BDN. I was just saying.
Yeah.
Yeah, I remember Fabio's thoughts on BDN. He's like, you got a balls of steel for that one.
Yeah. Yeah, man. Yeah. So yeah, nothing like talking about portfolio stuff for like an hour.
So
But no, I think like going forward, it's gonna be like, okay, I'm focused more on just like building up cash right now and just seeing what opportunities present themselves. I'm not in a rush for anything. I don't think I mean, it can take a long time to build out these positions, and then trying to add into positions that are playing out correctly and rewarding theses that are turning out to be correct. And then I think I'm leaning more towards being quick to cut things now. If I realize that, I wasn't accounting for something, or I'm wrong, or like for some reason I think I'm wrong, or the thesis changed. Because there's just no point if your thesis deviates too much, or the results deviate away from your thesis too much. Like, you gotta know just when to be like, hey, I was wrong, right?
Yeah.
And reassess and take like a realistic reassessment of it, and then where do you want to go from there? So
do you like how your portfolio currently is? Because that's like roughly around a little under 20 positions, I want to say.
yeah, I do.
Yeah, because like some people might be like, oh, you're too diversified, rebel. Like,
I mean, I like this amount of positions. I don't think I would want to have too much more than this. And I could, this is where I'm at. Okay, so if something happened to a high conviction stock where I could consolidate money into that, increase the allocation to 10%, then I would do that, right? But I have to wait for that opportunity.
Yeah.
And
right
I'm not gonna just because I like a company a lot, doesn't mean that it's like a buy no matter what, right? Like, just because you like your Tesla doesn't mean you should just allocate 20% to it at $400 and then yeah, I don't know. So I think it's just finding that balance and making sure that like you're allocated comfortably across the different high conviction companies that you have, given their relative valuation at any given point, right?
Yeah.
So, and a lot of times, like when I'm looking at building something out, I'm like, okay, well, at Palo Alto's current valuation, this is what I feel comfortable with, right? Because I really like the company. I want to be a part of the upside that I think it has. But at the same time, I want to reserve the ability to potentially add in more if I think if we see better opportunities on a valuation basis.
Yeah.
So that's kind of how I have been, I don't know, trying to position myself, is just I want to be, especially when I'm taking an initial decently sized position, like maybe over 3%, like I want to be happy with the upside potential, and I want to be happy with the downside potential, if that makes sense. Right.
Yeah.
So like if I'm like, oh, this is a pretty good deal. Like, I don't know, Meta, I think I was like 150 would be a great price point when I was originally looking at it. Got down to $88, right?
Yeah.
So like, I want to be in a position where I'm happy if it like goes up a ton from there, and I'm somewhat excited if it goes down and my thesis is remaining intact, because that just gives me better buying opportunity, and I don't want to overextend myself at a position where, if I went really heavy into Meta at like $200 or something like that, like
Yeah.
that kind of turns into a long downfall that's miserable because you can't add more capital to it. So
Yeah, I even though like I by and large like conceptually, even though I may forget some of the details, I knew what you'd reply with. I just wanted to give some value add to the viewers because there's always that like dichotomy of like, oh well,
yeah,
it should be more concentrated. That way you feel the upside power, and other people be
how
like, no, you need diversification. And
how I kind of look at it is that usually I'm gonna want like 10 positions that like that's where my main like idea thesis play out is,
yeah,
right? And you could say like, I have, so how many do I have here? 17, 18, 19, 20. 20 minus cash is 19.
yep,
But then I have, let's see, I have 1, 2, 3 that are in the same sector
yep,
with REITs that are kind of under the same thesis. You
hmm
could you could really almost look at that as like one play.
yeah,
And then I have Fortinet and Palo Alto, which are really like almost one play again,
yep,
right? um, it's just the accumulation of the different, like a Fortinet versus Palo Alto is different because they're valued differently.
mhm,
Um, and Fortinet was a good buy when Palo Alto wasn't, and now Palo Alto is getting interesting when Fortinet. I don't think I'd be buying Fortinet right now.
yeah,
So, um, I mean, if you break it down, and then same with Paylocity and Paycom,
take one, yeah,
they're like the same thing for me, right? They're basically the same thing that have a different like kind of target market as far
mhm,
as SME size. So I feel like really, even though I have maybe 19 positions, you could probably consolidate it down into like 4 or 5 ideas,
yeah,
right?
yeah,
And sometimes if I don't know, if I if I have an idea over a overall sector, but I don't know, or I don't have a super high confidence in like the top quality player, or I feel like the top quality player is way overvalued, I'm looking for other ways to get that exposure, and that might be buying several companies versus buying one.
mhm.
But
There you go, viewing public thoughts on
viewing
portfolio
public,
construction and management over time.
yes. If you guys have any questions, go ahead, drop them in the comments. Average Joe investor. Oh man. Uh oh man. It's there's some scary YouTube stuff out there, man.
Oh yeah, yeah.
There's
There's
some there's some scary stuff.
as far as like people's net worth and you know going forward, especially. Good God.
Yeah.
Yeah.
Yeah. Yield max is scary, that's for sure.
Yep.
But I don't know. Yield max, SoFi, Tesla. I think most
Overcompensations.
most of the stuff that you see on YouTube is very like emotionally based, right? People that are
Yeah.
like trying to escape something, or like I don't know, I don't know. The the market isn't so wrong that you can get a 50% yield on a security and it be flat or go up forever. Okay. The market is somewhat efficient. Somewhat efficient. Oh my gosh. Man. So are there any like sector opportunities, or what are the opportunities or your thoughts
Ooh.
on the
Oh, you're
market right
asking
now?
me. Ooh.
Yeah.
Ooh. Ooh. All right. So this is macro talk then, kind of. Not really.
Macro.
Maybe a
Oh,
little.
tell me about the Fed.
All right. So here's the thing that I've found myself in a conundrum with. Um, I thought that oil was an opportunity, and I've since exited not that long ago, and
Okay.
because I didn't have any strong convictions about where the price would go going forward. So energy companies tend to, for now, hold that correlation. I could see reasons for it to go up. I can see reasons for it to go down, and I think all reasons are perfectly valid, legitimate. No strong opinions. Get out while you can. But
Yeah.
here's yeah, but here's the one that's been interesting to me though, and the one that was interesting to me is gold. The price of gold and why it's been elevated for this long. Because like a commodity price can spike, and like you'd be like, it spiked for a short amount of time. That's just noise, whatever. But it's been elevated for quite some time, and at this point, it's like, okay, when is this a signal? And then do some digging, collaborative effort with other people. And the narrative is, oh, Chinese and Indian central banks have been buying gold. Well, okay, how much money has been put in from a percentage basis of the entire market? Not that much. So, eh. And
Really, really, gold is just an AI play
like
because GPUs use gold for
uh,
their circuit
sure,
board.
it's just like what I thought was is maybe there's a way to play this with and this would be is incredibly degenerate, but gold miners. If
Yeah.
like as of right now, the price or last I saw, the price disconnect between gold, be it this index or futures, uh, or certain ETFs, there has been a price disconnect. Now the problem is that I want to caution people is gold miners especially will always break your heart. So your exit has to be really good because when I've looked at price movements in the past, good God, the downswings are so violent. And yeah, for that reason, I'm like, no, this isn't for me. But I suspect there's a degen opportunity.
I mean, there's always going to be an opportunity somewhere. Like
Yeah,
hindsight is
yeah,
2020, right? My
yeah.
my
But
problem with like if you're wanting to play a commodity, I almost am just
yeah,
like I don't do this, but I'd rather just play
yeah.
the commodity, right?
Hmm.
Because I mean, I don't have the expertise of like which miner is going to be better or
Hmm.
outperform or whatever, or which miner has deposits that are actually greater than what they're projecting. Because that's really what you're playing, right?
Yeah,
You're playing you're playing the cost to extract
commodity.
whatever they have rights to.
Yep.
So
And
I feel like the really degen play is probably going to be like looking for miners that are valued like crap that potentially have um I don't know, that will potentially find deposits. But like if you're just wanting to play the commodity, just like play the commodity.
yeah,
Um that's kind of where I lean on it because I feel like um for my time of trying to research what is actually the best gold miners to play and how to manage that type of position, um I could probably get like 80% of the move out of just playing the commodity and not have to worry about that. You know what I mean?
yeah. Yeah. Like,
So, but if you're really well versed in that industry, it's not going to take you a lot of like effort to do that, right?
mm, yeah,
You might
yeah,
be able to put just a little bit in time into it, find a really good play that is potentially leveraged on the commodity, and then make bank from it. But like for me, it's just like I don't know. It's
yeah,
not
yeah.
not my thing. Not my
Cocoa
thing.
futures, they only go up, especially
Cocoa
when
futures.
yeah. Oh,
Tulip
jeez.
futures.
Cocoa
Tulip
futures
futures.
have been like the price of cocoa has been quite elevated, and that's because
Hmm,
reasonable things though. Like there've been reasonable explanations for that. But
crazy.
yeah, yeah. So that's my take on macro. Is I don't know. Like I really don't know. Just it's more of an I don't know than normal for whatever that's worth.
Yeah.
uh,
Dude,
but
there's been a lot of noise with the Fed, man. It seems like we've had multiple days where like um inflation based concerns or interest based concerns have like moved the market drastically.
yeah,
And then like the next day just bounces back. It's like, okay, whatever. I feel like it's like the algos taking advantage of like the news day of, and then it's just like, all right, we're back back to even. It's fine, guys. Don't worry. Um, let's see.
Yeah. So industry sectors, DoD budget was red, and Dan was nice enough to invite me for a collab on that.
What's the
As of
DoD budget looking like?
uh, not too many crazy changes. Ships in space were the ones that like stood out to me, like as maybe there's still something there, but the problem is that all the big boys are properly priced. And if you really wanted to go with shipbuilding from a military perspective for the U.S., Huntington Ingalls, it's a weird company. Moat, yes, but margins that say quality, no. So we can take that for what that's worth. Yeah, there's so it's like maybe there's an opportunity there if you find the right size company.
W- Was there any insights into like cybersecurity spend?
Though yeah, there was some, but it's just that the problem is that from a DoD perspective, cybersecurity has a bad tendency to be lumped in with like other software or like other uh
Mm.
non-hardware tech, where like the government, yeah, they'll sign a contract here too, and they may not necessarily be loyal to that end company that that they've contracted. So it's yeah, like you almost like, even though hardware generally is not the cool bit company or the cool space, you almost kind of want that relative moat-ish type thing.
Well, so that was another thing that the narrative from Palo Alto, listening to some of their calls is like their government based spend. I
Hmm.
think they were projecting for well, how many figures is that base? Nine figure, like nine
Hmm.
figure spend, and they don't think that's going to happen anymore.
Oh, really? Oof,
Yeah,
oof.
that was a big headwind to their growth.
Yeah,
No,
like.
and typically what I've seen or what I've seen before is that sometimes the government likes to cycle between their providers.
Yeah,
So they'll cycle from Fortinet to Palo Alto, and they'll cycle back from Palo Alto to Fortinet,
Fortinet. Yeah.
right? So if that does actually play out, if like Fortinet could end up um, getting a huge contract from the government, if that nine-figure contract goes from Palo Alto to Fortinet for their physical security appliances, firewall appliances,
Hmm.
um, and we see EU picking up, like that's going to be insane. like,
Yeah.
like they're gonna take off, and it's
Mhm.
it's going to be interesting because it's going to give the perspective that Palo Alto is crap when really it's just cyclicality within their customer base of how their customers spend.
Yeah. Yeah. Yeah, I'd agree. I think that's a fair assessment. I wouldn't take a look at cybersecurity and be like, oh, who's got government contracts? Let's slap a premium onto that bad boy. Like, no, no,
Yeah.
no, not from that perspective. Uh,
Oh God, Fortinet. Such junk. Yes. No. So Milk Shakespeare, I agree with you. I
yeah.
like if Palo Alto was a B plus or A minus, at least in the hardware firewall space. If Palo Alto was a B plus or A minus, like Fortinet would be like a C. They're just like, nah, nah.
Yeah.
Not a huge fan of them.
Yeah. But not awful, at least for whatever that's worth.
No. But
Um,
hey, I might, as long as I make money off of them, right?
yeah. Yeah.
So
So like, oh, the GEs. GE finally has completed the spinoffs.
oh yeah.
That's one that I'm like interested. Yeah, like uh, it's interesting because behind the scenes I've been talking with someone about the energy one, or I've rather been talking to multiple people on it. Some people would say GEV being the energy spinoff, GE Vernova or Vernovia.
Hmm.
Uh, yeah, they that one is the least appealing probably. But there might be something there. Like they might have enough departments or divisions like inflecting profitability and with stronger free cash flow, and could be something. Like it's another way uh for the power play on data centers.
Oh, yeah.
Yeah, because like just about every single uh like every single power input, it's almost gonna like need some sort of like turbine or some sort of component that GE Energy is one of the top two or top three people in. So like you have quality. Like it recently IPO'd. It's now below IPO price last I saw. Uh, that it could continue to go lower though. Like this is not GE Healthcare. GE Healthcare, like the current CEO of GE Aerospace, has the chairs chair is chairman of the board for GE Healthcare. When it came to GE Energy, like GE proper is like, yeah, we don't want any shares or ownership. Like
Hmm.
from a company perspective, from shareholders, yeah, you got your split, but yeah, so maybe opportunities there, maybe. Um, it is funny though because Siemens Energy is the other big boy and competitor for just about every single touch point that GEV has, and I want to say they might be at a slight discount, but maybe that's because the parent company of Siemens owns like 17% direct, roughly, and their pension fund owns a significantly uh, another significant portion. So it's things to consider.
Hmm. Eh, How do you feel about the like majority of the gains or for the S&P 500 coming from like very specific sectors for the last like year? Because it's been like it's been drastically weighted towards like tech. Um,
Knee jerk, you'd be like, "Oh, rebel, rebel, bubble, harumph, harumph." That being said, having like at least collaborated and listened in on enough earnings calls for some of these companies, there's legitimacy to this though. Like,
oh yeah.
yeah, like when companies say like when so many of the end hardware companies for the software companies are like, yeah, we have backlogs, or yeah, we're completely sold out this entire year. At, like at what point, like from a skeptic or a critical perspective, do you have to be like, you know what, maybe this is legitimate? Like, yeah, and in this case, like, I'm sorry, I think it's legitimate. I don't know how long it runs, but this.
Is this the new normal?
I no 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 no. There's a cyclicality aspect to consider,
Yeah.
but enjoy the cycle while you can. Um, PepsiCo's been down. The hell?
So over the last year.
Yeah. Um, maybe there's something for some of the healthcare or like insurance companies. Maybe
Oh man, they got crushed.
yeah, they got crushed
They
because what
got
was it?
crushed hard.
Social Security, I think it was like, yeah, we're harumphing.
Look at
And
that.
yeah,
Cigna though.
yep,
CI.
yep.
Rubbing it in my face.
It's okay. I missed out on
Oh
that one
man.
too. It's a Space Down weekend though, so I was gonna
No,
miss
I
it.
think like when it comes to the rally behind tech,
Yeah.
it's got a ton of legitimacy behind it. I think like you said that the most dangerous part is gonna be the cyclicality of like, okay,
Mhm.
how much runway are we actually gonna have for this type of spend?
Yeah.
And it it's super interesting because it's almost like a lot of the profits within tech are just like money shifting between the tech companies. You know what I mean?
Yeah.
It's like, like I feel like they can like almost self-sustain like their own. like economic dynamic. You know what I mean? Like it's very weird. But yeah, I feel like I don't know. I feel like this could last for another couple of years. It would not surprise me at all.
Same. Same. I wouldn't be that surprised. I would just like keep an eye on if or when things like backlogs start getting called into question. Like, cause like if we think about this like from an entrepreneur or a business operator perspective, if you have enough customers saying, yeah, we want X amount here, 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 and here at X amount of prices or whatever, like that are all agreed upon, that makes projections a hell of a lot easier. But as soon as like that dwindles, I'd anticipate management to be a little bit more shaky on their projections and assumptions, and maybe that's one of those like early signs of weakness with some companies more than others. But
Yeah.
I
No.
mean, by then maybe it's too late. I don't know. I don't know. Like there are some smart players in the markets for sure.
Yeah, you just gotta follow Pelosi, right?
Yeah, it's
Dude, the rebound that Palo Alto had off of that news was so stupid. It went from it like crashed to like 260, and then that came out like the next day, and then it went up to like what 320 or something like that. At some point, I was just like,
the Pelosi
so
effect.
dumb. Dan played that like a trading genius. Dan, man, Dan should be a trader. I think
He
he got I think he got in at like 265 and pieced out at like 310 or something like that. Like
he
in
dabbles.
like 3 days or
Yeah,
it's like, oh
he
my
dabbles.
gosh, man.
Uh,
Man. That was
oh,
good, man.
I have a ticker opportunity. If
Yeah.
you want to indulge the Trash Panda zero morals and ethics,
Oh gosh.
BTI.
Oh, BTI. Yeah, we can talk about
Yeah, BTI. Yeah, yeah. If again, assuming zero morals or ethics, like
it's
throw
just
those out
so
the window.
cheap.
Just yeah, it is so cheap,
It's so cheap.
so
And
cheap.
I like it's insane how cheap it is.
Like I
Um
now that I
yeah.
know that you one of your important bosses watches, I totally understand if you're not playing in this. But yeah, it is incredibly cheap. For reasons, I mean, like
Yeah. I mean, I don't necessarily have anything like against it, but like I I don't know. It the thing with me, at least like regardless of the sector or what they deal in, right?
mhm,
Um the biggest thing for me is that like are they going to go into like a stagnation or like a long-term like decline? I just don't know. Like I'm not I'm not super well versed in that space, and but at the same time I could see if I wanted to be get into this, just it's so cheap that you could almost just like take a position and just like leave it alone and just see what happens. Like
just get those dividends.
get that cash flow. Cash flow.
If
uh
like I part of me is curious, like morbid curiosity with this company. If they slash that dividend and just committed that to buybacks, I think they're still like over with the British exchange or like British laws as far as headquarters goes. So they are limited on buybacks. So maybe don't do that. But like, just imagine though, slash the dividend, all the dividend funds kick you out, and then
yeah,
just buy back.
dude, seriously. I don't
Uh,
know, man. It's just,
oh
it's so cheap.
yeah,
So cheap. Are you in it? Is this one
yeah,
that
yeah, yeah.
you
This
dab a
is
little
one I've
in?
recently have yeah
Yeah.
taken a position in.
I thought about it a while ago. I kind of had it on my radar, and I want to say like I was looking at like low 30s or like yeah, yeah, right here. So I mean, geez, it's cheap.
Yep.
Um, but it's like, is it cheap for a reason? Oh, um, But man, I mean, you almost have like, you could have like 75% upside on just the price, assuming you just had a normalization of multiple. Yeah, I don't know, man. I think the biggest thing for me right now is like, would I want to tie my capital up in it when I think there's other really, really, really interesting opportunities that long term are going to have a lot of tailwinds,
Hmm.
you know?
Yeah.
And I don't see BTI having a lot of like long term tailwinds. that's where like you almost have to price it out for deterioration. At least I would. And even then, it's like not bad. It's pretty cheap still, but oh man, that's rough. I don't know. All right.
All right. Wait. We got a question here from someone patiently asking. They asked like 2 times, once pretty early and now just recently. KSPI. I am
KSPI.
I am trying to do some frantic digging. So this is like
KSPI.
in no way gonna be like any good for up or downside at all. But
Oh, what in the world?
yeah, Kazakhstani. This is Kazakhstan. Very nice.
Oh my gosh.
It's nice.
KSP.
Yeah.
Fintech platform.
Yep. They
I'm
also have their
out.
own e-commerce. No, like they got e-commerce and their own payment platform. So maybe
Yeah, payment, fintech,
yeah,
ecom,
yeah.
marketplace.
I
I have no idea. No idea.
like they're able to
How do you
expand.
find this?
It's a big market.
I know, but like, how do you find that?
I mean, like I'd have to look into the
Screener, maybe?
eight probably. I'd have to look into the ADR structure because I think the KSPI is ADR.
Mm.
Um, but
Jerry, how did you find it? Tell me, man.
yeah.
We want to know. The people want to know.
Uh, no, but yeah, like if they're able to expand into Central Asia and the Caucasus, maybe. Well, no, because then sanctions if it was Persia or Iran. Um, yeah, I mean,
Mm.
I don't want to like necessarily crap on everything like knee jerk right away. It's just more that I don't know.
Yeah, no, same here. I
Like
don't know
it's
what I don't know.
yeah,
That's basically it.
yeah.
Hmm. Interesting.
Shout out Kazakhstan,
Yeah, that's right. All right, let's see.
#1 exporter of potassium.
Oh, okay. So just a recent listing on the stock market.
Yeah, yeah,
High Donuts. Okay.
yeah.
Yeah, I mean, I wouldn't even be dabbling in it. I mean, I don't know. I feel like that's stretching. Like for me, when I look at that and I'm like the time and research that I have to do into that, um, and like it being so far out of my area of competence, like not even worth the digging into.
We got a
That's
whopping
personally my thoughts.
we got a whopping 4 executives. We got a CEO, COO, CFO, and like uh some like head of markets, according to that website.
Nice.
Yeah. So
Oh,
at least in theory, it doesn't have admin bloat.
yes, that's true.
In theory.
How you been feeling about Apple lately?
Uh, I don't know. What have you been feeling? Like I just doesn't move the needle. It hasn't gotten quote unquote optically cheap enough, but
I think I'm keeping an eye on it
oh
because
really?
it well, to me, I feel like it's finally kind of like disconnecting from the market a bit, you
Hmm.
know?
Hmm. Yeah.
There've been a lot of times where, market's up, Apple's flat or down.
Yeah.
And I a lot of times it feels like it could be setting up for a sell-off. That's what that's the feeling I have.
Yeah.
Either like a long period of consolidation, or it's setting up for a bit of negativity and a bit of a sell-off. So I don't know. I mean, we'll see, but I've just noticed that on a relative basis to the market, Apple has been pretty weak.
Yeah.
Now, at least that's what I've thought, but maybe not. Here, let me pull up a comparison. Let's see what we can see over here. SPY versus. See, on the 1 day, I'm correct. So I'm correct for all time frames. Let's see. Yeah, like on a 6-month, see that deviation?
Yeah.
It's had a massive amount of deviation. So I don't know. I've just kind of noticed like the deviation over the last pretty much year to date. And it seems like it's continuing to deviate. And like the valuation isn't, I don't know, it's not like super attractive, but it's not like super insane either right now. But I think I would want them at a higher discount.
I just don't like that they've been buying back though, like this entire time.
Oh, same here.
Yeah.
Same here. I like punish them. Come on.
Like,
but like with that being said, if this thing got down to like 120,
yeah.
I think that's when things get really interesting. And it's kind of more of just like I feel like the setup might be starting to form. Does that make sense? Like it's deviating. Maybe they push out 1 or 2 bad cues. We get a lot more negative sentiment. We get some sell-offs. I feel like it's potentially starting to be the beginning of a decent forming setup for some accumulation. Because if we had like Apple trading in at a net income yield or EBIT yield of 5-6%, I mean that's pretty dang good. Yeah, I don't know. I've just noticed that it seems to be getting weaker and weaker and weaker lately. So,
I wonder what rank you want to do a fun little ranking game?
sure.
Yeah, rank the big techs, like the super big techs, like we're talking north of $1 trillion or $1.5 trillion market cap.
What's the criteria for ranking? Like, what are we ranking them on?
We're not going to take into account the price of their shares right now. Like just
okay, so valuation doesn't matter.
Pure quality, yeah, pure quality.
Quality.
Like your view of quality, yeah.
Quality, future, like long-term potential.
Yeah.
Okay. Okay, well, let's see.
Yeah,
Microsoft would be number 1.
Ooh, alrighty.
Yeah.
Alrighty.
Yeah. I just like Microsoft with their services side and Azure exploding like it's been exploding, along with being at the forefront and leading kind of like this AI boom. I think I would put Microsoft up at number 1. Number 2, well, let's see. Let me bring up a list first. Let's go over here.
Yep.
Index breakdown. Got VU.
Yep.
Hey, the S&P 500 agrees with me.
Yeah, you agree with the market. See, markets aren't always stupid.
I think honestly, I would go Microsoft.
Yep.
Damn. It would be a close. The second would be close between Meta and Amazon.
Ooh, alrighty.
For me, like those are close for me. So you could do like Microsoft, Amazon, Meta,
Mhm.
um, Google, Apple. I think Apple would be coming in number 5.
Oh. Oh,
Um,
really? You put Google ahead of Apple? Is it
yes,
just
I would.
the core business as far as, like, how much
Yeah,
how it's a cash making machine? Okay.
yeah. I
Yeah.
just like the business economics of it a lot more
Yeah.
than Apple.
Would
I
you
do.
want to put, NVIDIA in that list? And if it is in the list, where would it go?
If I put Nvidia in that list, it would be last.
Oh, okay.
Um,
Ooh.
I think there's too much potential cyclicality for Nvidia that I
Yeah.
don't really like. I think there's too much future competition for Nvidia that I don't
Mhm.
really like.
Yeah.
I think like the moats and like the strength of the overall companies on the other um, large cap tech companies are way better than Nvidia.
Mm.
So because I still believe that Nvidia is eventually um, a lot of their products are eventually going to be commoditized,
Yeah.
and it's going to be very very hard for them to sustain the type of um, margins that they have
Mhm.
long term, and the growth that they have, or even flattening growth, right?
Yeah.
We already see it with companies like Meta talking about ROCE versus InfiniBand, and how ROCE is an Ethernet based commoditized version of InfiniBand that gives just as good performance and almost better control. So InfiniBand, I think, is going to start being commoditized. That section of their business, I think, is going to be have that headwind. And I think that as the AI boom continues, more and more uh, large cap tech are going to be working with companies to develop specific like GPUs or ASICs or TPUs for the specific compute needs that they have.
Mhm.
And they're going to do that at a large scale at way lower margins. So similarly to how Google is developing their own TPUs.
Yeah.
I think like Microsoft, Meta, a lot of the large cap tech companies are going to start doing that. And then we're going to have uh, a decent. I just see way too many headwinds for Nvidia. I see like long term headwinds, like talking
Mm.
10, 20 years, like
Yeah.
long term headwinds. I see way too many long term headwinds for Nvidia. So they would be
Yeah.
last because of that.
I I hear you, and by and large, I agree with you. It's just that if there was a management team in the space that they operate in that I wouldn't want to bet against, it would be them. Just because, like part of me says you're gonna run out of hats to grab, like pull rabbits out of.
Yeah.
But they did it again though. Like before it was crypto miners, and now it's AI. And I'm like I'm just wondering to myself, like, is there another thing that they could pull another rabbit out of a hat? I
No, I think there is, but I don't think there
Yeah.
will ever. I don't think for decades we're going to see another thing as big as the tailwinds that a compute transition is giving us,
Yeah.
right? Like
Mhm.
they're basically like we're going through like a technological like transition right now
Yeah.
in compute infrastructure. And I think they'll be able to pivot and they're going to be fine. Like as a company, they're going to be fine long term. I
Mhm.
wouldn't hold them as an investment other than just the index, right?
Yeah. Yeah.
Just because I see way too many potential headwinds. And if I did hold them as an investment, I would want to see them going through a really, really deep, bad cyclical pullback. Right. And then like after a lot of that pain is baked in,
Yeah.
um, take a position at that point, right? But I don't know. But that being said, they could have tailwinds for another 4 years,
Yeah.
right?
Yeah.
I I don't know, but
Mhm.
like long term, like which really individual stock picking, you should probably be looking at the pretty immediate term, like what's going to be happening in the next 12 months, like 1 year, 2 year, 3 year, 4 year, 5 year.
Mhm.
So Nvidia could be a great short term play, like a shortish term play. I just, man, like if you're talking about stocks that I had to buy and I could never manage that position, I couldn't. Yeah.
Yeah. That
What
being
about
said,
you?
oh well, what about me? What about me? This is one of those
How,
spaces that I'm bad at.
how would you rank them? Just in accordance to the spy weighting?
I honestly, it would be fairly close with the exception of Nvidia. Like,
Okay.
yeah, like Microsoft and Amazon to me, ignoring price, like obviously, like same same parameters. It seems like those two, like top three for sure, one and two almost certainly in my view. But Meta also though certainly top three, probably a good argument for two or three in my eyes. Like
Yep.
I don't know, like it's yeah, it's tough. I Part of me wants to say Apple in front of Google by virtue of management team,
Mm.
but that being said, though, the like if the management team is this bad with Google when it comes to like being able to communicate to analysts and market participants, and they still are a cash cow, maybe there is something to Google's fundamental like underlying business than Apple. Uh, but yeah, like there's. I mean, we are talking about the greatest of the great companies, though. Like, I'm not here to like poop on these companies and be like, oh, these are like failed EV SPACs, like that they're going to zero. like,
Poop on
yeah, like let's put this into perspective here. Like these companies are phenomenal companies. like for most cases, for many people, if these companies offered you a very well paying job for whatever field you're in, I think many of us would consider it.
Yeah.
At least.
Right.
Yeah. Yeah. So I I just don't know where to put Nvidia though. That's the thing though. Like I hear and fully agree with what you're saying. Like longer term, yes, but good God though, like I didn't think that they'd pull this off, and they have. Like, and it's credible. Like I'm not in any rush to shorten video anytime soon.
No. I mean, they've been able to be in the right place at the right time,
Yeah.
right?
Yeah.
Pretty much all
Yep.
the time.
Yeah.
I just don't know if they're ever gonna, after this cycle happens, right? And after we really see how um the long-term growth or like development of AIDCs plays out,
Hmm.
because I think it's not going to be winner take all, right? It's not going to be all Nvidia. um yeah, there was way too much risk from a business standpoint to put all your eggs in one basket, as long as you can get comparable other competitors or technology to be able to diversify, kind of like your supply chain of what you're buying and coming and bringing in and building out. So it's not going to be winner take all, I don't think. I think a lot of it's going to be self-developed. And I mean, we see Nvidia already pivoting in that way, right?
Yeah.
We already see Nvidia kind of spinning up arms of the business that are going to be more focused on custom uh, GPU architecture for customers, right?
Hmm.
So I, I just don't know if they're going to be able to pivot at the right place at the right time with even greater upside again.
Yeah.
That's where it's hard for me.
If I think their long shot was possibly some sort of robotics, maybe, and maybe there's enough waves off of that. But then again, though,
Yeah.
I don't know. Like, part of me also thinks like unit economics of like, yeah, you can see a floor cleaning robot effectively in a Sam's Club, maybe Costco. I'm not sure if they have them over there. But that being said, though, like, yeah, you've slashed a lot of the, in theory, lower paying employees, but you're gonna to offset that though, you're gonna need higher paying mechanics. and I don't know how many of those you're going to need per store. So it's the value prop would be interesting where the world goes from here. But
Yeah.
Plenty of I don't knows. Conceptually, I think I have enough of the things in mind as far as consideration goes, but yeah, good lord, it's been one hell of a company.
Right. Jesus.
Yeah.
Crazy.
Yep.
No, but like I wouldn't bet against them short term. Like that's the hard thing. Like we don't know how long these tailwinds are going to last. It could last another 4 years. We don't know. I mean, shoot, maybe Nvidia becomes a $4 trillion company. that would be higher than that'd be the first $4 trillion company, right?
I think so. Yeah.
Microsoft is 3. I think
Yep.
Apple is Microsoft's 3.1. Yeah, man.
Yeah, Apple's 2.6 too. Yeah, it's world's a changing. World is a changing.
The world is changing, man.
Yep.
All right. Well, if you guys got any questions, post them in the comments now. If not, I think we're going to end this almost 2-hour live stream, unless you got more to talk about, Bacon. I guess I could stay on. I might need a bathroom break, but I could stay on.
I don't think I have much else really. Yeah, like I mean, unless you wanted to plug stuff, you should plug your stuff, Jesse. This is your channel.
None of this is financial advice.
Oh,
Should have said that at the beginning. Dang it. None of this is financial advice. Yeah, I'm just some guy on YouTube sharing stuff. So,
but the template, the valuation template.
Also, yes, pretty valuation template. If you want access to this, there's the Discord. Honestly, okay, so let's have a conversation.
Yes.
I'm thinking about what?
State of the channel. State of the Union, State of the channel.
State of the Union. Yeah. Welcome to the State of the Union. I'm thinking about just closing off the Discord to any new invites.
Really?
Yeah. I think like it's become like there's a lot of like scammers out there on Discord and stuff like that. It's just been such a pain in the butt to deal with. And like I just man, I don't know. Maybe I should just create a channel and say, hey guys, if you're a scammer, post it in this channel so everybody can see it. Like, I don't know, man. It's becoming like a lot more effort. I haven't been as active as I used to be on my Discord, just because life is busy and I'm doing other stuff. Also, why I haven't posted on YouTube a ton, because life is busy and I'm doing other stuff.
Yeah.
So I don't know. It's like one of those things where, if I had a lot more time and a lot more free time, I don't think I'd even think about like closing it off to any new invites. But just with the amount of time that I have now, it's like, at what point do you remove or try to choke out distractions in your life for more important things? Right.
Yeah.
That's kind of where I'm at with Discord and with YouTube a little bit. But YouTube, I really enjoy whenever I go on it and I do it. I enjoy it. I haven't been posting analysis videos lately just because I've been busy, and it would feel like more like a job than anything if I did it. So it's been like, I don't want YouTube to ever feel like that. So that's why I haven't been like really forcing myself to post stuff.
Yeah.
If I get moments of inspiration, maybe I will. But lately, it's just been none of that. But with that being said, for now, you can join the Discord. You could. And I've got this template available. If you're a supporter of the Discord, you can like do 3 write-ups, get supporter access, and get access to the template. You can also, I think it's like $5 a month if you want to be a supporter, whatever. I might be turning that off as well. I don't know. But if you're looking for automated templates or building your own automated template, I use Financial Modeling Prep. And let me see if I can grab actually the code. But I use Financial Modeling Prep, And if you use the code that's in the description, I think it's like a 25% discount or something like that. But there is a bit of a discount. So if you use that, you will get a discount. I will get a little bit of a commission from it. And of course, thank you for that if you actually do that. What I did when I started developing my template.
Yep.
So let's go to monthly basis. So from 29 to 23 a month, I think that's right. So I use just the starter package. When I started developing my template, I got the monthly access on the starter package, started developing it. And then after I was like, yeah, I'm actually going to use this. It's going to provide a lot of value. I went over to the annual, and annually, I don't think that's the right pricing. I think I'm locked in at a lower price. Whoops.
Yeah,
oh, well.
these things happen.
But so annually, I mean, it's a better deal. I think it's like $19 a month annually, but you pay up front. So if you guys are looking for something to be able to automate financial modeling, Prep does have a API plugin for Google Sheets. That's what I use. And after about 6 months of development, I came out with kind of like version 1 of this, and I've just slowly been iterating it ever since. To kind of do different type of evaluations and different type of overviews and whatnot. So it's nice. Like, you can kind of custom build your own thing and custom build your own valuation tools. And I definitely encourage people to build their own and understand them inside and out, and not just go off of mine, because you don't know really how mine works. You don't know the ins and outs of it. So but yeah, so that's all the plugs I got.
Yeah.
But I will tell you, it can I've been able to drop things into this, and in 5 minutes I feel like I have a decent understanding of the like quantitative aspects of the company, which is pretty nice, and the valuation aspects of the company. So it's definitely sped up my my process for doing kind of quantitative evaluation and analysis of companies. Definitely helped me up. So anyway, am I missing anything, Bacon?
No, I think you hit it all. I mean,
All
I've
right.
just noticed a trend though amongst content creators that actually make money off their investments, and others that make money off their content and Patreon.
Okay. So that's the other thing. That's the other thing with YouTube and with Discords and stuff like that. Like, I'm not really highly incentivized to try to extract money out of my audience. Like,
Yeah.
I'm just not, like,
No.
at all. Like, one halfway decent investment is going to make me more money in a year than I can make on YouTube and Discord in like 10 years. Like, at least at my current rate, right? Like, I'm like, it's not worth the effort to try to like really gung-ho go after like subscriptions or Patreons and stuff like that.
Yeah.
So,
Yeah.
and a lot of times, if you have a good enough community, a big benefit of it is just getting insights and knowledge from other people on other companies that have a better ability to analyze or understand the industry that you don't understand and explain it to you. So that's a huge value of it. So, but yeah, that being said, I think we are going to call it. It's been a good hour and 54 minutes. Maybe I'll timestamp some stuff in here. Maybe not. We'll see. And I'll try to come back on and do a video or a live stream quicker than I did the last one, which was like a month. But thank you guys for joining. Have a good one. Not financial advice, entertainment purposes only. See you later.